quite encouraging. And I think market has become quite stock and sector specific. And wherever we have the good earning growth visibility, I think market is rewarding those stocks. Coming to the index, because index is heavy with the large 2, 3 major sectors like banking, IT, which are facing some kind of you can say growth slowdown or earnings slowdown. I think that is reflecting the overall index performance. But I think on an overall market, I think market is quite bullish, quite constructive, and market is rightly rewarding the companies who are reporting good numbers.
Okay, so that is on your reading on the markets. And Dikshit, also talk to us about how have you been seeing the earnings season pan out? We're halfway through it. What has been your reading? What is your view on some of the heavyweights from the Nifty as well as the broader end of the market? And more importantly, given that we still have one half of the earnings season to look at, do you believe that the momentum could improve going ahead?
Yeah, I think so far earning has been quite decent. We have not seen any major negative surprise, to be honest. And one would argue that most of the impact of this geopolitical situation can be felt in the first quarter FY27 onwards. But so far, at least for the fourth quarter, we have not seen any major negative surprise. And I think on the index level, I think 6-7% growth on an aggregate level has been reported by the companies, and which has been in line with the expectations. So I think going forward, we still have a full year to go. We are still in the first month of the next financial year. And we are hopeful that if the ongoing geopolitical issues are resolved, maybe in the short term, maybe in next 10-15 days. So maybe from second quarter onwards, we'll see good revival in the earnings. And we are hopeful that at least for the next 2 years, we can see double-digit earning growth. And anyways, market is now basically trying to factor in next 1 year's kind of earnings. So if we look at FY27 or FY28, I don't think there is any material impact as of now of all these issues. And looking at the valuations, market is trading below long-term averages in terms of the P multiple. Earning growth is slightly picking up as compared to last 2 years, because last 2 years earning growth has been sluggish in the mid-single digit. And I think the next 2 years earning growth can pick up materially, led by banks, consumer sector, as well as industrials. So I think overall basis, if we take more than 1 year view, markets are looking good, both from the fundamental basis as well as from the valuations perspective.
Well, today, of course, the earnings reaction on both SBI as well as BSE are really cases in point. In fact, SBI is seeing the sharpest fall it has since budget day, when it fell about 8%. SBI intraday graph should just come off for you on your screen. 7.25% lower right now on the futures. Dalmia Bharat, Dixon, which is down about almost 4% right now. Inox Wind is down 3%. Britannia is down 6%. Britannia, of course, was a mixed bag. And it's not just SBI. Look what's happening in the private banking space. Look at an HDFC Bank. That's down 2% right now. Axis is lower by 2%. And then L&T, which has also eased off since its earnings, that's also lower by about almost 1.6% or so. Kunal, what are you making of the Bank Nifty construct in light of the fall on SBI right now?
I think it's a buy at current levels, 55,000.